Well, stocks are down and bond yields are up. It's all because we've got concerns over the most powerful man, Donald Trump, going head to head against the world's richest man in a worsening feud. My name is Jessica Amir, a market strategist here with The Daily, bringing you this Friday report on the 6th day of June. So investors and traders don't really know what the heck is going on. We've got Tesla boss Elon Musk and US President Donald Trump in an exchange of insults and threats. On one hand, we've got Donald Trump now threatening to cut contracts with not just Tesla's government contracts, but also all of his contracts. And now we've since seen Elon Musk respond. He's asked his team to start decommissioning the Dragon spacecraft. That's a pretty big deal because this craft was the craft that recently brought back two NASA astronauts back to Earth after they were stranded for 2 months at the hands of a Boeing Starliner capsule debacle. So what's going on? What does this all mean for stocks? Well, in response, we've seen investors sell out of Nasdaq 100 stocks, and that's why precisely the Nasdaq 100 index fell about 0.8% overnight. Let's just put that into context. Here we can see our Tesla shares really led the drag, and that was exactly what caused most of the selling in the Nasdaq 100. Tesla shares tumbling 14%. In the normal trading session, their sell-off continued after hours, but now we're starting to see investors slightly buy into the dip, but we're not really sure where it's going to be headed. But all in all, Elon Musk's net worth has now plunged, and Tesla's shares themselves have lost $152 billion in market value, and Tesla is now back below $1 trillion in market value. After hours, it is important to keep an eye on Tesla shares. You can trade those on Moomoo, but do keep in mind that we do have quite an ominous tone being set for equities. Let's also bring this into play. What we can see is really painting a picture of what it looks like now that Elon Musk has lost $33 billion of his net worth overnight. But let's put that into context. He is still the world's richest man. His net worth is, as we can see on the screen, bottom top. His net worth is $334 billion. But remember, it's taken a hit. That's obviously because many people didn't like that he was head of Doge. And that's why on the top right-hand side, we can see that his net worth has plunged this year. So far, year to date, it's down $97 billion. And as we can see, top left, these are the best and worst performers in the Nasdaq 100 overnight. It wasn't just Tesla that copped the selling, it was Palantir too, because now people are really questioning what's going on at the White House. And of course, Palantir has 60% of their contracts with global governments, including the US. So that's something to consider. So we're speaking about the dynamic of a potential market pullback here. So the Nasdaq 100, it closed at its lows of the day. This basically suggests that investors are bearish, meaning we should and could be seeing more selling and more down days ahead for the Nasdaq 100. Perhaps a key gauge of this is at Moomoo, we track the volatility index. You can just type in VIX on the platform. But globally, this basically measures fear and greed. The good news is that the volatility index has barely ticked up. Now, this basically suggests that the eruption between Donald Trump and Elon Musk could be contained. Maybe, just maybe. If you do believe the old adage that this too shall pass, maybe this sell-off could be contained for a little while and markets bounce back. But then again, look, of course, we do have a big catalyst overnight, US jobs data. If that jobs data is bad, sentiment will obviously be whacked. But investors should remember the long-term bull case for markets does seem to be intact, and that is company earnings are continuing to grow stronger than expected. Company earnings outlooks are pretty strong too, and central banks are cutting interest rates. Overnight, the ECB continued to cut their interest rates, and that's precisely why we saw European stocks do well. Here's an ETF that tracks some of the world's biggest companies, or rather Europe's biggest companies. And this ETF is tradable on Moomoo as well. But going back to that bullish scenario that we're painting, so I just mentioned that we've got central banks cutting interest rates vis-a-vis the ECB, Europe's central bank. Plus, also consider that we've got US-China trade talks. They seem to be going smoothly. Well, that seems to be the case of what happened overnight. So overall, the long-term bullish scenario does seem to be intact. But nevertheless, we did see Australia's share market yesterday hit its second highest level in history. We last saw this level touched on V-Day or Valentine's Day. Now, from that point, remember what happened after Valentine's Day in February? Well, the market fell 14%, rather precisely 15%. But we since recouped that. We gained more than we lost. So the market fell 15%, then it rose up 16.3%. Now, this is a reminder to all of us that markets don't go up in a straight line. But the major indices, such as the ASX 200, have always recovered. That's something for you to consider. The Aussie share market has also always recovered from a crash in history, and so too has the US major indices, the S&P 500 and the Nasdaq 100. But we're going back to that negative scenario, that negative sentiment that we saw offshore, and that is affecting Aussie stocks as well. I think many will be questioning yesterday's that record that we hit. Was that the peak? Was that the peak, ladies and gents? We need to consider that. Many will be questioning that could have been the peak before we see another trough. I do say the term kiss of death, but I do think that a pullback may be quite insular. But stocks could fall a little, so it could be worthy to look at your stocks in your portfolio. Is it time to maybe trim some of your gains, trim some profits? I suspect that we'll probably see this play out down under in Australia today, but I do think selling will probably be contained to tech and high growth sectors. But do keep an eye on commodities, because commodities are continuing to move higher. We spoke about the US-China trade talks, somewhat going well, but gold should be on your radar. It's ticked up ever so slightly, but so too has silver. Silver's hit a new 13-year high overnight, so well done if you have been buying into silver stocks or ETFs. So both silver and gold are looking like they're wanting to extend right here, right now. Now, this is a stock that you should be watching. It's called ADT, Adriatic Metals. Why have I mentioned this one? Well, this stock is one of the most bought silver stocks on the ASX, but it's also, I guess, the first stock that you see out of the largest holdings in some of the world's biggest silver ETFs. One of the world's biggest silver ETFs is the Global X Global Silver Miners ETF. It goes by the ticker SIL. And the biggest ASX stock in that is the one that we've put here, ADT. So, ladies and gents, keep this stock on your radar. Probably going to be searching for higher highs and higher levels, which means more gains for you if you are believing that the silver price can extend here as well. It's great to have your company. For all the detail on the stocks and ETFs we mentioned today, head over to Moomoo's platform. Stay safe, happy trading. See you Monday.